I think stocks and bonds will both rally eventually. That's what the big call is. That's what I think happens. So I think stocks and bonds rally. As I said, technology, crypto rally the most. If I just look down my Bloomberg right now, the S&P's up 8%, the Nasdaq's up 25%. I've been saying this since last year, and everyone thought I was crazy. The exponential age basket that I talked about on Real Vision, that everyone thought I was a complete idiot for, that's up about 40% this year. Crypto, which everybody thought was completely dead, is up 50, 60, 70%, depending what you're looking at. Stuff like Solana's up 120%.
We remain unwavering in our belief in the possibilities of this digital revolution, despite the fact that there is some justification for people's skepticism towards Bitcoin and the larger crypto ecosystem, particularly among Americans. We are adamant that significant developments are happening behind the scenes in the industry, particularly in the area of Bitcoin, the father of all cryptocurrencies. These groundbreaking innovations have the potential to reshape the future and hold enormous promise for those who steadfastly devote themselves to this space. Let's try to figure out the revolutionary trends and enlightening opportunities that are coming, preparing the way for Bitcoin and its fervent advocates to have a more profitable and bright future. Those that understand Bitcoin's potential and dedicate themselves to its development can benefit greatly from the revolutionary trends in the cryptocurrency business. Individuals can put themselves in the driver's seat of this digital revolution by maintaining their level of knowledge, practicing ethical investing, and embracing the changing ecosystem. For Bitcoin and its supporters, the path to a more affluent and optimistic future needs ongoing learning, collaboration, and adaptability. An influential investor and economist named Raoul has written extensively on and examined the exponential age and its effects. The ability of exponential technologies to change industries, open up new commercial opportunities, and spur economic growth is stressed by the author. He thinks that in order for people, organizations, and governments to survive in the face of rapid change, it is essential that they comprehend and adjust to the exponential age. The phrase exponential age is frequently used to refer to the current era, which is characterized by quick technical progress and the exponential growth of many industries. It alludes to a period when advancements in technology, particularly in fields like artificial intelligence, robots, biotechnology, and blockchain, are changing many facets of society and the economy. There have been substantial changes in the way we live, work, and interact as a result of the exponential age's unprecedented pace of innovation and disruption. Raoul presents his most recent opinions and a market update in this video. He also discusses the current condition of cryptocurrency. Please hit the like and subscribe buttons if you haven't already before we start listening to him. Many thanks for viewing our videos.
I've had a very strong view for a while, which was that liquidity was everything, and I wrote all of this up in that everything code that I've talked a bit about. That interview with Nathaniel Whittingmore, I went through quite a lot of what the everything code is, but that's still kind of exclusive to GMI. But liquidity is everything. All of my forward-looking indicators have been suggesting that liquidity is going to keep rising and that it would drive crypto and tech more than anything else. And that's basically been the story of the year so far. And I think that continues. And that's confused a lot of people. The one trade that's confused me is the bond trade, and that's confused a lot of people. Bond yields should have fallen by now, and they still haven't. But I think this is to do with the debt ceiling issue, which is the other confusing thing. Because the debt ceiling issue has some real risks around it, and we don't really know how to price them. All we do know is people are pretty bearish around it. And I think that's reasonable too, to have hedged around it, because we don't know what can happen. But the chances are that anything that causes a paralysis of financial markets will lead to that expression I always use, more cowbell, more stimulus to come. So I'm going to run through a couple of charts very quickly, just to show some of the things that are on my radar screen so people can think about. So this is the Global Macro Investor Weekly Liquidity Index. That's basically around the G5 central bank balance sheets. That we have our Financial Conditions Index, which is based around the dollar, rates, and a whole bunch of other stuff, which leads this, as does ISM. And it suggests that liquidity is going to keep rising, all the way through this year. And the everything code suggests it actually keeps rising all the way through till the end of 2025. So yes, we might have some stumbling blocks. Yes, we might have some hurdles, but liquidity going forwards as the economy slows down and the central banks start increasing their activity, that will drive asset prices higher. So that's the first chart I wanted to show you. So that's the liquidity chart. Why liquidity matters is this chart. This is the chart of the NASDAQ against that same liquidity index. That's the tightest correlation I've ever seen, and it explains 97.5% of all the movements in the NASDAQ is liquidity. And this is around this currency debasement idea. The more the central banks print, the more you're changing the denominator, not the actual value of the asset themselves. So again, the only assets that have really gone up in balance sheet terms are technology, the NASDAQ, and other like the exponential age stocks, and crypto. Also, actually, interesting enough, so is luxury goods. That there's a reason Bernard Arnault is the richest man in the world. It's because what does he sell? He sells scarcity, right? In a world where you're devaluing the denominator, scarce things go up more in price. So Bernard Arnault's balance sheet, his bank account goes up every week. So that's another chart for you to show. This is speculative positioning in the S&P 500. I have literally never seen anything like it. So the market is insanely bearish, which is why the NASDAQ's up 1.8% today, because people just don't want to believe it. They're angry. They want the market to go down. They want their bear market and they want their justice, and it's not happening. And the reason being is everybody's ridiculously, ludicrously short. On the flip side of the equation, we're going into this, and that's obviously driven by the debt ceiling. The other side of the debt ceiling is this chart, which is the speculative positioning in bonds. Now, bonds, as I mentioned before, have not been playing ball. I thought yields should be falling, but they haven't yet. But look what's going on here. This is the largest speculative short positioning in the history of the bond market. So if anything changes at the margin here, we're going to see a gigantic rally in bonds, which I'm still expecting, but this whole debt ceiling dynamic is getting in the way. Inflation dynamics on the other hand are falling very fast. Things like the Truflation index, which is a real-time calculation on chain of millions of prices, suggests that US CPI as of today is 3.2%. I think it still goes to zero by June or July, which Alex Gurevich has been talking about both on Real Vision and also on Twitter as well. We're very in a small camp of that. We're also seeing wage growth coming down. We're seeing rents and wages are the most lagging of all. So they're all still to come down. So generally speaking, economy slowing. We've got this whole debt ceiling stuff that's getting people very nervous. The resolution of that, one way or the other, ends up being ongoing liquidity as the economy slows. The banking issues have slowed down for the time being, but doesn't mean it's gone away. These things tend to come in phases. Technology and crypto tend to outperform. Crypto's been consolidating for a while, but it's still up 50-60% on the year, still the best performing asset. But again, it's likely to pick up as liquidity comes forward, as shown by our forward-looking liquidity indicators. And we've probably got 20 or 30 different things we could show you to say that liquidity is going up. So I remain massively bullish. There will be a correction at some point in all of this. As people start throwing in the towel in the short positions, then we might get a correction before we continue to move higher later on in the summer. So overall, super bullish. The only one that's puzzling me is the bond market still hasn't played ball, but I think we need to get through this debt ceiling thing, and then a lot of hedges get unwound.
How would you characterize Raoul Pal's interview? Are you as confident as he is? Do you think there will soon be a correction? We're curious about what you think. Thank you for watching.